Well, our call on the dollar really hasn't changed because we've seen the US dollar index fall, over 2% just in the past month, and it's been exacerbated by the devastation with the Hurricane Harvey and Irma that we've seen. That widespread devastation could end up costing, I think we're looking at estimated costs of around 290 billion US dollars, or 1.5% of GDP. So not surprisingly, we've seen the US dollar index obviously weaken on the back of that. But more fundamentally, when we look at what's happening on the economic side of the ledger, we see that this talk between President Trump and the Democrats to try and pass some hurricane relief funds to the debt ceiling that's been extended until December this year has got the congressional Republicans a little bit riled, and that may impact on the US tax reform plans going forward. But on the US economy side, Fed speak has been very, very cautious about US inflation. They want to see US inflation move towards its target of 2% before they can even entertain the idea of raising interest rates again. The US Fed funds futures pricing for another rate hike in the US for December this year is as low as 30%. And when we look at that, low inflation is certainly stopping the Fed from raising interest rates again this year.